As we know, productivity is an important driver of economic returns. A rising trend in productivity is desirable for any industry because it means that the industry is better able to weather the negative impact from lower prices and higher input costs. In other words, a declining terms of trade. It will be the only way that profitability can increase under such circumstances. So here we see that for the Commonwealth trawl sector, output and input use have declined over a sustained period until 2005-06, a period of substantial structural adjustment in the sector. Since then, there's been a reversal of this trend, as less efficient vessels exited the fishery following the buyback. One last thing I need to mention about this figure here. In 2008-09, there was a dip in productivity, but it's too early to tell if this is going to persist in the future and to what extent terms of trade improvements in the sector, if any, can offset the negative impacts on profitability. So here it's important that the improvements that have occurred in profitability as a result of the recent Commonwealth Structural Adjustment Package are maintained, not only in this fishery, but also in the other Commonwealth fisheries where effort was reduced. This will require management's ongoing focus on setting target effort levels that are consistent with achieving the maximum economic returns which are sustainable from the fisheries. So this indicator, which is a profit decompositional analysis, this indicator shows a little bit more about what's going on. So performance here is measured relative to a reference firm, and in our analysis, the most profitable reference firm is a vessel operating in the fishery in 2008-09. The profit and productivity indexes shown here are adjusted for stock changes to isolate the changes in profits and productivity to market factors alone. So what this analysis shows is that in recent years, profitability in the sector has improved, bringing the industry closer to the average of the reference vessel. Most of the source of this improvement has been a result of higher beach prices. Input prices have played less of a role influencing profitability in the sector over this period. Productivity has also improved profitability. In particular, in the year following the buyback in 2007-08, productivity improvements drove most of the increase in profits. It was a period when the fish price changes were making little, if any, contribution to profitability in the sector. So to summarise this presentation, first, global factors continue to impact on the industry in both the export and domestic market. Added to this are ongoing input cost pressures, especially from fuel and labour constraints. And all this means is that the outlook for the industry remains challenging, despite any improvement that we may see from a lower dollar. So today I've presented a few economic indicators that are useful for monitoring economic performance of our fisheries. There are others. The point is that economic indicators are useful and needed to monitor economic performance. Lastly, it is worth reiterating that the economic objective of fisheries management is important. Meeting this objective will require ongoing focus on the collection and analysis of economic data and using this data to develop cost-effective indicators to help with the management of our fisheries. ABARES has a role to play here, and we will be continuing our research into developing these indicators going forward. Thanks very much.